Hello friends, welcome to the monastery where mindful trading meets order flows. Today's NIFTY move was not random. The volume profile clearly shows where institutions absorbed selling and where the market accepted value. If you understand this structure, tomorrow's trade becomes much clearer. Welcome back to Mind Monastery, where we decode markets through structure, volume, and institutional footprints. Today, we'll analyze NIFTY futures for 9th March 2026 using volume profile mapping. Let's break down the auction story of the day. First, look at the structure from the previous sessions. We had two important levels already marked on the chart. That is 24,712, which is the upper acceptance area or the POC, and the 24,490 major support level. This zone acted as a value area from the previous auction. When the market opened today, it did not open inside a value area. Instead, it opened much lower, near 23,845. That immediately told us one thing. This was a gap down imbalance opening. At the open, the market started building volume concentration near 23,870, which is today's point of control. You can see this clearly on the profile. This becomes the early point of control. What does this tells you? This is where buyers and sellers temporarily agreed on price. In auction market theory, this is called price discovery after an imbalance. After building value around 23,870, the market started gradually auctioning higher. Did you notice something interesting here? The profile is thick in the lower region and thin in the upper region. This means institutions were accumulating at lower prices. Once enough contracts were absorbed, the market started moving upward through low volume nodes, and the markets move fastest through low volume areas. As the session progressed, the value started shifting higher. This is extremely important. In volume profile terminology, we call this value migration up, which means the market is slowly accepting higher prices. This is a bullish structural behavior. Later in the session, the market approached the 24,180 to 24,200 region. Notice the reaction there. Price quickly stalled and pulled back. But why? Because that zone sits just below a previous volume distribution area. When price reaches such levels, the market needs new buyers to continue the auction higher. Today, that participation was missing. Today's volume profile gives us three key insights. First, 23,870 is now a strong intraday support. That is where the highest volume was traded today. Second, the market moved through a low volume pocket between 23,950 and 2400. This zone may act as a fast trading area tomorrow. And third, the market is still trading well below the major resistance near 24,490. Now the tomorrow's market map. So here is the market map for the next session. Support levels 23,870 major support, 23,950 intraday pivot. Resistance levels 24,180, which is the immediate resistance, and 24,490, which is the major structural resistance. If the market holds above 23,950, buyers may attempt another auction towards 24,200. But if 23,870 breaks, we may see a fresh downside auction. The biggest takeaway from today's session is this. The market did not trend aggressively. Instead, it built value after a gap down. That means the market is currently in a balancing phase before the next major move. And when balance breaks, that's where the real opportunity appears. If you found this useful, please like, share and subscribe to Mind Monastery. Every day we decode the market using volume profile, order flow and smart money concepts. because the goal here is simple: no prediction, but understanding the auction. Thank you.